well, especially like the POA. I don't know if you heard about the POA, but like no balance sheets, no income statements. They had provision for bad debts, they had payroll, they had budgets, not even a bank rec, no errors. So yeah, and then in the maths paper, they didn't bring any circle geometry. They well, some people did like that, but I did not. And then they brought what you call it, so they replaced the circle geometry with transformations, like reflections, rotations, and then that was question 9 part A or B, and then in question 10 part A they brought matrices of transformations. So it's like they doubled down on it, and I'm like, why they did that, you know? So yeah, people have, and then yesterday I heard physics yesterday was easy, but I heard that from a teacher, so I don't know if students felt the same way. But he said it did come a little different. I heard something with bio is just plants. So I'm not sure, but one of the most interesting things I've heard is that apparently, and I don't know if this stretches from between CSEC and CAPE, but apparently, and it's not just considering, they are going to remove SBAs from non-practical subjects. So I was most taken aback. When I say in a good way, when I heard that, I'm like, I hope it's for Form 6 too. 1 second.
Yeah, I saw it and I said, look, so we're that happy.
Yeah, you know, because that's a whole set of headache. One less set of headache, you know. But I guess it's left to be seen. But I heard from a teacher who went to the workshop online or the meeting or whatever the case, whatever you want to call it. He said, yeah. Oh, hold on, this is not with Laura here. All right. I mean, that's still Laura morning. Laura, good morning. How are you doing?
Morning, sir. I'm alright.
All right. I'm cool. Sorry I never got back to you with the FIFO thing. I just just been going. Yeah. Yeah, boy. All right. And I realized I never confirmed with you that we were having class today, so I just kind of came on hoping that people were like, "We'll still send some polls," and people say they're coming, so he will be there. All right. Right. So today we're supposed to have a double session. People said they could attend. So I have up to 2023. I don't have 2024, 2025. But when we see the number of repeats, and then what's been happening with the maths multiple choice sessions, and even with the POA as well, we were able to finish pretty quickly. The POA, I got it down to a point where it was between like 30 to 40 minutes, even with full explanations and workers and all that kind of stuff. And the maths yesterday was more like about an hour and 10 minutes, right? So we'll see how it goes today. So I have the 2020 prep for today. I have 2021 prep for today as well. I also, just in case, I put out the 2018 and 2019, although they're not really copied and pasted in the way they should be, all right? But yeah, I don't want to do all the, hold on, let me let in Shane here. All right, so let's let in Shane. Hey, Shane, morning, how you doing, man? All right. Okay, all right, let's put that down there. Okay, that's, what is that? I'm not sure what that is. Anyhow, small thing. Okay, so right, we're coming in bit by bit, piece by piece. Anisha. Oh, there we go. The Tobago crew on the inside, boy. All right. Hey, good morning, Anisha. How we doing? Good to see you on today. Sorry. Guess I should have had breakfast. Anyhow, small thing.
Morning, sir.
Morning. All right, glad to hear that. Here's Miss Ellis. All right. Hey, Caitlin, morning. How we doing? Good to have you on. All right. Sound like you're still in your bed, you. Anyhow. So.
I was doing that.
All right, no worries. Yeah, I had to walk Marley back home, and he was eating some of those tortillas, the nacho cheese tortillas. So his hands were very. So I put a t-shirt over my work shirt, but of course my collar was out, so he did in my collar. Anyhow, should have had a wash anyway, but I mean, we're done here, so I wasn't going to risk being later than. Anyhow, so folks, I don't want to wait too long to starting, but what I was explaining to those who here, well, there's only a few of y'all online right now, which is fine by me. I'm okay with that. All right. So what I was explaining is that the multiple choices, as in like the sessions I've been doing, I don't know how, I don't know if it's something I'm missing, but like I've been able to go a little faster, even with full explanations. But that doesn't mean that'll feed across to here. We may need to go slowly, we may need to go quickly. And I'll be very honest, there are a couple of questions over the years that I don't know the answer to, and we tried to discuss it, and some years it's C, some years it's B, and then there are like interesting reasons for each of them, you know. So, oh, hey Bree, how are you doing? Long time no see. Yeah. So as we go on, so of course if you guys have your AI up, you can always plug it in and see what they say. Because the funny part is this morning, I was going through my YouTube comments on my math multiple choice, and somebody pointed out that there was a little phrase that said any part thereof in a question, and I'm like, oh, that changes the answer completely. But I've been given the solution as, let's say 102 when it's supposed to be 110, and I copied and pasted the pick of the question and sent it to about 4 or 5 different math teachers. So one answer back, well, yeah, I've been saying 102 for years, and then I sent them the other one saying it's 110 because there's a part thereof. And the logic given, I understood the logic, but so check this, right? So it's almost like an accounting question too, because it's payroll, right? So I wonder if I have it here, boy. I'll have to search for it. It's been on practically every paper that we've done, eh? I'll just show you real quick because I'm waiting on 1 or 2 more people to show, but we'll start by 10:10 for sure. All right, I sent you guys the paper. Hold on, that would be in the earlier part of the paper, right? Yeah, let me see. I'll bring back memories for some of you here with some C-Sec maths, boy. Caitlin, I found, where did I find it, boy? I found in the back of one of the papers I was doing. I think it was a POE paper one. What it was, boy? G's in the chat. All they are going upstairs. I want to take a walk. I can't make. And a few other comments. So like, that had to be Caitlin right out. And there was some other drawings I think you and Samara had done. Hold on, is it here? No, okay, it's a commissions question, but I feel like if that's the commission one there, then it wouldn't be in this paper. And it wouldn't be further on either, because after that they stopped doing that. Okay, so let me check a different paper then. That's 2022. What about 23 then? Alright, let's start from the front. Wait, I could just pull up my what? No, I can't pull up WhatsApp because then YouTube will flag the video. Aha, this is it here. So check it. For every $100 sales or part thereof, right? And that's the phrase that I don't know how can my brain just like ignore that phrase completely, right? A salesman is paid $10 as commission. So if his sales for a particular month was $1,020, how much commission was he paid? So I say, okay, well, if you pay $10 commission on every 100 sales you make, that's a 10% commission. So if you made 1,020 of sales, 10% of that is 102. But this part here, or part thereof, it means that for every 100 or a part thereof the 100. So more than one of the teachers who I messaged this morning were telling me, it's like when they go to a car park and they say it's like $8 or $10 per hour or any part thereof. So let me say you stay from 8 to 9:01. You had to pay for 2 hours, even though you only stay for 1 minute past that, you know? So I was like, But here's the question, right? From a practical perspective, right? Okay, cool. So let's say he made the $20 sales and I'm paying him $10 out of that 20. Okay, but what if he made $10 sales? Does he get the whole $10? Right? What if he made $5 sales? Does he get $10 still? If he made $1 sales, does he get $10 still? So I feel like there has to be a little more, there has to be a bit of an audit of this question, right? Because I don't feel that the part thereof applies in the same way as it would a car park, but again, I could be wrong. Anyhow, folks are going to pull back up the key paper. So we kind of started in the middle here. What I mean in the middle with the 2020 paper is because what happens usually is the first paper takes us like the full 2 hours and a little more. And then as we start to see the repeats, we just started to go faster. There was one time it became a game as to how many papers we could finish in the 2 hours. And I think the record is either 4 or 5. I can't remember. Yeah, so, but we don't have to do 12 years worth of papers. We could do all we have from the 2020s. And of course, if anybody has the 2004 and, the 2024 and or the 2025 and they're willing to share so we could do it together, cool. If not, we'll from 2023 go back, right? But I wouldn't start with 2023. I'd start with 2020 and go forward from there. Okay, so with that said, I think I'm ready to begin, right? So guys are going to pull it up. We're going to read through it. We could discuss a little bit, but long story short, we're just trying to finish in a reasonable time. Okay, so which is the correct sequence of the following actions? What is the correct sequence of the following? Okay, when seeking to purchase materials. So we have the requisition order, the passing of the bill for payment, receipt of materials, raising a goods received note, preparation of the purchase order for its dispatch. Okay, So to me, number 1 is in the correct place. Hold on. I'm using the green for this one. Yeah. So to me, number 1 is in the correct place, right? So number 1 here. That's the first step. You have to put in your requisition order, right? So that one is in the correct place. And here the funny part, if you look in your options, there's only one option with 1 as the first item. So we don't even need to really read the rest, but just to be thorough, right? Yeah, so you put in your requisition order, right? Then you prepare your purchase order and you dispatch it. So there's 1-4. Well, so D seeming good. Then you receive your materials, right? And then you will pass the bill for payment. So it's like a kind of credit purchase, right? So for number 1 here, the answer will be D. Now, of course, if anybody has any pushback, I'm quite willing to discuss. Like I said, we don't have to finish in an hour and a half. We don't have to finish in 35 minutes. We could take 2 hours and even a little change, right? Sorry, let me see if there's anybody coming in person. I know 1 or 2 people said they would, but when I didn't see them, I figured I'll start. Okay, here's the light. Let's just give Elijah a minute to come in, but yeah, I should probably open that paper. All right, so that's in your wrong place. All right. Hey Elijah, morning. How you going? Come in. Yeah, we literally just did question 1, but I'll print out the paper for you, right? I'll send it in the chat. But I know you probably would want a hard copy, right? All right, cool. So paper 1. Yeah, she's do that. She's a little. She's very, very playful. Long story short. All right. Okay. Yeah, I'll just print that real quick and we'll get back to it. Okay. I have no idea. Whoever come, as far as I can say, right? Right, so we literally just start with question 1. So this is the 2020 paper, right? It said, what is the correct sequence of the following actions when seeking to purchase materials? So we said item 1, the requisition order is where somebody in the factory says, hey, I require materials, so I'm going to requisition it. So that's the form you fill out to say, I need materials. Then it goes to 4. You have to, okay, well, we need this, so we have to order it. So you have to prepare the purchase order and then send out the order. And then it goes back to 3. You receive the materials you order, and then you pass the bill for payment. So the funny part is, once we acknowledge that item 1 has to be first, there's only one option in ABC and D with item 1 first, which is option D. All right, cool. So what else? I only have up to 2023 paper. We didn't get 2024. Somebody must have them, I'm sure. They're just keeping them for purposes. All right, so we're going again. All right, how are the wages of factory maintenance personnel usually classified? So factory maintenance is definitely overheads, right? So indirect labor, yes. Manufacturing overhead costs, yes. So item C has 2 yeses to it, so we'll put a little tick there. All right. Yeah, guys. And also, what I usually tend to do is I tend to do what's visible on the screen and then scroll down. So sometimes, like in the math and the POE, it would go 1, 2, 3, 4 on the left-hand side, and then 5, 6, 7, 8 on the right-hand side. So I might end up doing 1, 2, 5, and 6, and then scroll down and do the rest. Right. Dark Twix bar. Unit 1, I'm not sure. On the 29th, nah boy. I already have the unit 2 and the math people to balance any breeze. But here what to do. DM me on our platform. I have multiple choice solutions, and we could talk about giving you access to them. Right? Okay. Number 3. When employees are paid on a piece rate basis. So what is piece rate? They're paid for every unit that they complete that is quality assured, right? The type of cost for their pay, fixed? No. Mixed? No. Variable? Yeah, for sure. Because that means that the employees paid total fit, right, rises and falls in direct proportion to the level of output. The more they make, the more they get paid. The less they make, the less they get paid. Right? 3 is C. I think this is one I have trouble with. The owner of a wooden furniture manufacturing firm has recently introduced a new, more efficient admin process. Which of the following costs would be directly affected by this change? So we have warehouse rental, factory cleaners' wages, factory supervisor salary, and overtime pay to carpenters, right? So what they do is, hold on, every paper, they seem to either, no problem, the Arctics bar, yeah. They seem to either leave out the word admin or include it. So when they leave out the word admin, and it's just, hold on, sorry, I thought I was taken off, yeah. When they leave out Beavis, behave thyself, yeah. So when they leave out the word admin and they say a new, more efficient process, I assume manufacturing. So if you have a more efficient manufacturing process, to me, D is the answer. Because if it's more efficient, then there'll be less need for overtime, right? But here, when you put in the word admin, to me, that changes the question fundamentally. Now, to me, the cleaners, I don't feel the cleaners are also affected by admin, and I don't feel it's warehouse rental.
Would it be that receive the supervisor?
Right, but here's the thing, right? A supervisor's salary is a fixed cost. If you introduce a new, more efficient process, it just means the supervisor will do his or her work more quickly. But to me, it's not going to affect the salary, right? So Google Meet, so Anisha, Caitlin, Laura, Sophia, Shane, I am very open to any feedback you all have, or if you want to plug it into whatever AI you use and get a solution, answer for this. But yeah, this one always stumps me, right? A new, more efficient admin process. So to me, the supervisor is the person who will do some of the, I mean, I don't even know if it's admin, because admin is non-manufacturing, right? But it says the owner of a wooden furniture manufacturing company has received, so there is some admin in the manufacturing side of it, I would say, because the supervisor would have to do some admin work, like he'll have to record certain things what the case is, and it'll be non-manufacturing.
There's also
But
probably looking too much into it, and they just put it
Uh-huh.
just shrimp or something.
all right, chat says D, overtime Peter Carpenters, an admin process. All right,
Because I'm saying probably just looking too much into the administrative part of this.
but that's what it says, admin, right? Admin is non-production. Anyway, okay, all right, so you know what? We will put D. Right, Gemini says, what? All right, yeah, well, like I said, if they left out the word admin, I would definitely go with D. Okay, right, listen to Jeremy. Dark text, that is you, right? Okay, cool, no problems. Right. Well, I'll have to check it back a bit later. We in process now. Right, so I just gonna put a little asterisk here because, like I said, that it bothers me. I can't find a rationale, right, for it. But anyhow, let me not stick, right? So even if a question given so much trouble, so look, sorry, you chat, sorry, my bad. Oh, sorry, I just saw the thing, right. An improved admin process can increase efficiency in areas such as scheduling, communication, and workflow coordination. This may reduce delays and improve production planning, which can directly reduce the need for overtime. Okay, so admin will increase efficiency. Okay. The other costs are generally more fixed and less directly influenced. Right, I agree with warehouse rental, cleaners' wages. Again, supervisor salary is fixed as well. Warehouse rental is fixed as well, so, okay. Yeah, fixed, yeah. Overtime paid, okay. All right, okay, thank you, Laura, thank you, Sophia. Okay, so based on that, it was saying that, I'll just read it one more time, right? So this is not me, this is chat. All right, so an improved admin process can increase efficiency in the areas such as scheduling, communication, and workflow coordination. This may reduce delays and improve production planning, which can directly reduce the need for overtime. Okay, all right. So whether we put admin or just efficient process is overtime. All right, thank you. Right, let's go. Oh, that's the end of the page. Okay. The following information was extracted from the books of James Inc. Cost of goods sold, ending balance of finished goods inventory, and cost of goods manufactured. What is the beginning balance of finished goods for the period? Okay, cool. So, so that's the opening stock, right? So cost of goods sold is opening stock plus the cost of goods manufactured minus the closing stock. So we don't have the opening stock, right? The cost of goods manufactured is 57,000. The closing stock is 107. And then, no, sorry, the closing stock is 20, my bad, sorry about that, yeah. It's, come on, man, Philip, be yourself, 20. And the cost of goods sold is 107, all right. All right, so basically we had to work backwards. So when you work backwards, 100 plus the 20, 107 plus the 20 will give us 127. And then you'll have to subtract that. So 127 minus 57 is 70. So A. All right, so let's just double check it. So if your opening stock was 70, 70 plus 57 is 127, 127 minus 20 is 107. That's the cost of goods sold. All right, cool. Okay, oh, somebody. Oh, here's Lily. All right. All right. Hey, morning, Lily. How you doing? Good to have you on. All right. Yeah, we're doing the 2020 paper one. We just finished the first page, so you didn't miss too much. All right. So relatively easy stuff so far, to be honest. All right. All right. So for those who were here, Elijah, we okay with page one?
Yeah.
All right. Cool. So Anisha, Caitlin, Laura, Sophia, and Shane, just give me a little thumbs up or Genie chat. Right. Either one works fine. If you're good with it. If you want to redo, re-explain any of them, let me know. Right. Again, it's not a problem. I don't mind going over stuff. That's what we're here for. All right. Okay. We good? All right. Okay, so let's continue. Monsieur Molino, continue. Right. All right, let's zoom in a bit more than that, right? All right, a firm's product has an annual demand of 2,000 units. All right, the cost of placing one order is $800, and there's a holding cost of $8 per unit. What is the firm's annual carrying cost? Or is that EOQ question? Oh, God, my mind gone blank already, right? Okay, annual demand is 2,000. The cost of placing an order is 800. Our holding cost, right, is $8. What's the firm's annual carrying? So isn't it like the average? So so basically, from what I seem to remember, is like this divided by 2. Oh, so hold on. So far, you didn't miss much. Alright. Yeah, guys, just give me 1 sec to just print a copy off for Genevieve real quick there. Alright. Yeah. Okay, so yeah, so annual demand is that the cost is so the annual carrying cost, right? So, like I was saying, from what I remember, is that the 2,000 divided by 2, so that like the average, basically the average number of units at any particular point in time, and then multiply that by 8. So that's going to give us 8,000. Just cross check me with that one, please, right? Because like I said, the EUQ stuff, my mind is just, I don't know if that's just one of the things that the prolonged latency perhaps just cut off access to, but yeah. So if you wanna cross check me and correct me, that's not a problem, right? I'd rather we have a correct answer and I learn something too than we stick with something that's incorrect, all right? Okay, going again. Number 7, in which of the following ways should plastic that is used in the manufacture of dolls be classified? So prime, yes. Direct, yes. Product, yes. Fixed, no. So you want 3 yeses and a no down to the bottom right hand side. Everything else. So it is a prime cost. It's direct materials. That means it's direct. I mean, if it's direct, it's automatically prime, not so? So that kind of redundant. Product, yes. All right. Hey, Reggie, what's going on? We're on the inside. All right, which of the following is an advantage of the piece rate method of paying wages? So you pay for actual output, right? Helps to reduce production rejects. Not necessarily. It might cause people to try to produce a lot in a short space of time and make more mistakes. It can help reduce monotony at the workplace. Maybe. It is guaranteed to lead to an increase in product quality. Nope. It is an incentive to produce more within a given time. Yes, it is. All right. So yeah, because people want to be paid for whatever they make, so they'll try to make more, right? But it can lead to poor quality if they try to cut corners and take shortcuts that are not necessarily beneficial. Okay. All right. Number 9. Keystone Limited produces a product under license from Zango Limited. At the end of each year, Keystone Limited has to pay Zango Limited the license fee as follows. All right, for the first 60,000 liters is $30,000, and for every liter thereafter is 30 cents. How is the license fee classified? To me, that's mixed. To me, you have a fixed cost, and then after you pass that, it's variable. All right, so I'll go with mixed. It's definitely not fixed alone. It's fixed up to a point, but then it becomes variable, and it's also not variable alone. And I know we have something called a step variable cost, but this is not that, right? So if you wanted to diagram it, right, what it would kind of look like, right? So that's your two axes, right? So you would stick at the 30,000 for the first 60,000 liters, and then you would have like a kind of a gentle slope upwards thereafter based on the 30 cents per liter. All right. Okay. Cool. So mixed. All right, and then number 10.
So I have a question.
Yeah, go ahead.
You ever do a multiple choice and
Mhm.
you start getting the same option over
Yep.
like an odd D, and then you just start to get suspicious.
Yeah, yeah.
And you just put a different option just in case.
Boy, yes, but then logic was like, look, if you're working it out and you trust you're working, go with the working. If 15 answers end up being D in a row and you trust you're working, then 15 answers are D. All right, but obviously that's a mental game. Somebody playing with you. All right. Okay, look at next EOQ. Your firm estimates that its annual carrying cost for material is 30 cents per kilogram. Annual demand is 50,000 kilograms. The ordering cost is $100 per kilogram. And then we have the EOQ. Okay, so I think this is D. So remember the EOQ. So there was what was the acronym to do overseas, right?
To do overseas.
Yeah, to do overseas. Oops, what went on there? To do overseas, right? All right. So the D is the demand, the annual demand, which is the 50,000. The O is the ordering cost. So 2 by 50,000. The ordering cost is 100, and the carrying cost per unit per annum is 30 cents.
Would you believe the first time I heard this acronym?
It was when we were doing the classes, and somebody happened to be like, oh, that makes sense. Maybe it was when you're working here for, maybe it's that. I don't know. All right, so 2 by 50,000 is 100,000, right? 100,000 by 100 is 10 million. And then we divide that by 0.3. So good, all right. And then square root that. Yeah, 5773.5, yeah. The answer here is D. Okay. All right, cool. Okay, all right, so ladies and gents in the chat on Google Meet, if you guys are good with 6 to 10, as in all the solutions on this page, just give me a little G in the chat or a thumbs up, either one works, right? If there are any that you're not sure about, you want to push back on, you want to revisit, that's not a problem, we could do that, all right? Okay, and Genevieve and Elijah, are we okay with this page?
Yeah.
Yeah? All right. Okay, so let's go on to the next page. All right. Item 11 refers to the following. Purchases and sales for the past year for a firm are shown in the table below. Assume purchases are made at the start of each month, while sales occur at the end of each month. Okay. Right. Where are we? Right. Purchases, January, February. March is sales. Then we have purchases again in April and May, and then more sales in May. Okay. If the firm uses a LIFO basis for its inventory valuation, what is the value of its closing inventory at the end of May? Okay, so LIFO. All right, cool. So what would happen here? So 6 and 4 will give us 10, not so? And if you sell 7 out of 10, right? So which batch? So if it's LIFO, which batch came in last? January or February? February, right? So you're going to sell from that batch first. Now, of course, that's going to, so 7,000 is going to use up 4,000 from there and 3,000 from here, right? So at the end of March, you're left with 3,000 at 2. And then you buy 5,000 more, and then you sell the 5,000 more, again in this order, from the May go up. So this 5,000 uses these two batches. So the only thing you're left with is the 3,000 units in January at 2. And 3,000 at 2 will give us 6,000. Okay. All right. Interesting. Sorry, was that a question on WhatsApp? Let me see. Oh no. Right. Okay. Right. Cool. Okay. Yeah. So 12 and 13 both refer to the following data for company X. Okay. So opening inventory, materials received, materials requisition. Okay. So the value of closing inventory using FIFO. All right. Cool. So check it, right? If we were to add up all the units available, so opening stock plus the purchases, that gives us the units available, right? So 300 and 1,000 is 1,300. 1,300 plus 6 is 1,900. So 1,900 units, right, minus the 1,500 leaves us with 400. Now, under FIFO, we sell going down, right? So we start, and then basically what that means is whatever is left must be from the bottom go up. So if we only have 400 left, it must be from this batch. So in the case of number 12, it'll be 400 at $10 each, which will give us 4,000. Right? In the case of LIFO, however, right? We sell from the bottom, go up, right? But we still gonna have 400 left. But here's what's gonna happen, right? How we're gonna make that up is you're gonna have 300 from here and 100 from here, because if you sell 1,500, right, 6 is gonna come from here, and you're only gonna need 900 out of the 1,000, which is gonna leave us with 100 from that batch. So for the LIFO, you're gonna have 300 at the 880, and you're gonna have 100 at 9. So I think that's 40 plus 900, which is gonna give us 3540. Right? Again, please feel free to correct my arithmetic, or if anything I said is outright wrong. Okay. Right. So this page is a nice little stock valuation page. I feel like it was reasonably doable. All right, Elijah, how are you feeling with this page? All right, Genevieve, how about you? Cool. All right. So Google Meet, you know the drill, right? If you're good with that, give my Gene Chat a thumbs up. Either one works. If you have any questions, you need to rework anything, again, that's not a problem. Let me know. All right. So if you're just chomping at the bit, ready to go on the next page, so there we go. Right. Cool. Well, there we go. Okay. Which of the following graphs reflects the renting of extra warehouse space by a firm during periods of increased demand? Now that's A, right? Warehouse rent is a fixed cost. And if you have to rent an extra warehouse, it's going to be a step cost, right? So it's just going to shoot up and then go across, shoot up and go across, right? As in straight up. There's not going to be any diagonal here. All right, that's 14. 15, which of the following are not period costs? So you either have product costs, which are manufacturing costs, or period costs, which are non-manufacturing costs. So which of the following are not period costs? So which are manufacturing costs? Well, the one that says manufacturing costs, option B. All right, okay. A service organization would most likely use a predetermined overhead rate based on, I would go with direct labor. Because, I mean, what are you providing? A service. Does the machine provide the service? Probably not, right? If it's like lessons, there's a teacher doing it. If it's you go to a hairdresser, a person is delivering the service. If you go to a masseuse, if you go to a lawyer, if you go to a chef, right? All these people, I mean, well, a chef will provide you with a meal, but the service is part of it, right? So I would say a service organization would most likely use a predetermined OAR on direct labor hours. Okay. Number 17 is the last one on this page. Oh, yeah. Okay, so some big work and some extra working on start here. All right, Husky Corporation uses a job order costing system and is working on 2 jobs, AB1 and AB2. So if you look at the table, AB1 has work in process that starts, so some costs brought forward. The material cost, so the total cost is 60. AB1 uses 60% of that, which is 36, and AB2 uses 40%, which is 24,000. And in direct labor, the total is 48. Sorry, yeah, go ahead. Question?
Sorry, could you just start over with the question?
Yeah, no problem. Right, all I was doing, I was just breaking down the table, right? So we have 2 jobs. We have AB1 and AB2. With AB1, we have some costs brought forward from the previous period, but not with AB2. Right? Now, with materials, we have a total of 60,000. AB1 gets 60% of that, AB2 gets 40%, 60% being 36,000, 40% being 24,000. And with the direct labor, we have 48,000 in total, 75% going to AB1, giving us a next 36, 25% going to AB2, giving us 12,000, right? Now, overheads were charged to jobs using a rate of 150% of direct labor cost. I feel that worth highlighting. Both jobs were completed by the end of the month, but only AB2 was sold. What entry should be made to record this? So we have all these numbers for nothing. Lovely. So what entry should be made to record the sale of job AB2? All right. So you would debit cost of sales and credit. Sorry. No. Yeah. Debit cost of sales and credit finished goods. That's option C. All right. Right. So just in case anybody's wondering why. So we have three components of costs that we use to accumulate cost of jobs, right? Direct materials, direct labor, and overhead. These three are accumulated in work in process. When the job is finished, the costs are transferred out to finished goods. Finished goods are either sold or not sold. If finished goods are sold, well, they stay in there and they go on the balance sheet. So the finished goods inventory stays on the balance sheet. If they are sold, they go to the inventory. And guess what? Since it's the cost price, they will be put in the cost of, well, technically speaking, the cost of goods sold account, right? So when costs are transferred, wherever the costs are going to, you debit where they go in and you credit where they're coming from, right? So that double entry hack works for this, right? So you would debit cost of sales and you would credit finished goods, all right? So I hope that helps people understand why 17 is C. But, I mean, they give us a whole set of numbers, boy, and nothing to do with it. All right. Okay, Genevieve and Elijah, are we okay with this page, 14, 15, 16, and 17? Do you have any questions on any of them? No? All right, Google Meet, same question for you. If you guys are good with that, thumbs up, Genie chat. If you need me to go over any of them, all of them, now is a good time to let me know. All right. Okay, all right, cool, no problems. Let's continue. 18 and 19. Which of the following is a similarity between job order costing and process costing? So both utilize a job cost sheet. No, job costing does that. Process costing has the process costing reproduction cost report. Costs are accumulated by departments. No, that's more of a process costing thing. Job costing, costs are accumulated by jobs, which is exactly what option D says. Costs are accumulated by individual jobs. So C, both are used to collect the cost of production. That's exactly what they're for. They are costing systems, and that's what they do. They collect the cost of production. All right, number 19. Okay, hold on, Derek. Okay, so we have, I'm looking at the question because I was about to read you the whole data, and like, let me see what they want. Is it just journal entries, or do they want a figure? Right. So the amount of fixed manufacturing overhead over or under applied. Right, so Derek's Limited produces and sells electronic readers. Okay. During the year, the company produced 20,000 units and sold 15,000. Cost data relating to the products show the following. Okay, cool. Right, materials, labor per unit, variable manufacturing, and then total fixed manufacturing overheads. Budgeted production, and then actual fixed manufacturing. Okay, so we know that in order to get the OAR, the overhead rate, we would take the budgeted. So I'm assuming that this means budgeted. It says total fixed manufacturing and then actual down here. So I'm going to take the 216 as the budgeted, right? So if we take 216 and divide it by 18, that should be what, 17? No, 18 by 18 is 324. Okay, so hold on. So 216 divided by 18 is 12. Okay, good. So this means that it's $12 per unit is the overhead rate, all right? And then we produced how many? Now the budgeted was 18, but we produced 20, right? So if we take the 20,000 and we multiply it by the 12, we're going to get 240,000 applied. And as we could see here, actual fixed manufacturing overheads was 245. So, simple question, is 240 equal to 245? No. Is it more or less than 245? Less. So we didn't apply enough. So based on the information, it seems that overheads were under-applied. So right away we could eliminate option B and C because those both say over. And of course the difference between 245 and 240 is just 5. So it seems here that A is the answer. 5,000 under-applied. Right? Now guys, if I say an answer and I shade the wrong one, let me know. Oh, hey Shanara, how you doing? Yeah, so if I say A and I shade B, let me know. I've been doing that sometimes, right? Not sure why. Just inattention, I suppose. All right. So that's this page. So Genevieve and sorry, Elijah, let me know if you're good with that. If you need me to recap anything, now is a good time to ask. And same thing for Google Meet. All right. Sorry, guys. Yeah, let me know if you guys are okay with that. If you want to go over number 19 again, let me know. It's not a problem. But if you're good, you're good. That's cool. All right. Okay, let's go. So we are approaching the halfway mark after we finish this page. So I'm going to zoom in here so we could do whatever is visible, right? So I feel like we could do, can we do 20, boy? Okay, we could do 20. I feel like I want to come down with 22 and 23 first, but no, let's we're kind of going in order so far, so I guess we could stick with that. So hold on, let's just read the question, right? So number 2, what is the total amount of overhead applied to job number 8? And 21 also, okay, so yeah, if we're doing 20, we're doing 21 one time. It wouldn't make sense trying to go back over. All right, so Adam's company uses a job order costing system. Company has 3 jobs in process, 5, 8, and 12. Okay. Raw material used, 120. Direct labor per hour, 850. Overhead applied based on direct labor cost is 120, 120%, right? Sorry. Okay. So direct materials was requisition as follows. So job 5, job 8, job 12, 30%, and then, so okay, the term of material was requisition as follows, and then in the table you put in labor hours as well. Okay, whatever. The balance of the requisitions were considered indirect. Okay, because yeah, if you look at 30 and 25 and 25, that totals to 80%. So the 20%, so they used 120, right? 80% of which was direct, because those were requisitioned directly to those jobs, and then the remaining 20% is indirect. Okay. Indirect labor was 44. Other actual overhead costs total 36,000. What is the total amount of overhead applied to job number 8? Okay. So overhead is applied on the basis of direct labor cost. 120% of direct labor cost. So we agree with that statement, right? Okay. So what therefore is the direct labor cost of job number 8? So sorry, hold on, let me get a highlighter. All right, so job number 8 used 3,100 labor hours, and the labor hours cost $8.50 each, right? So we're going to take 3,100 labor hours multiplied by 8.50 and then multiply that by 120% or just 1.2. All right, so let's plug it up in the calculator, see what we get. 3,100, sorry, that's 310, my bad. All right, by 8.5 by 1.2. So I got 31,620. All right, so that's the overhead applied to job number 8. Cool. Oh, exactly, how are you doing? No, see you there. Kish, sorry, this is Keep Accounting Unit 2, Cost and Managerial Accounting, multiple choice. All right. If job number 12 is completed and transferred and overhead is applied at the end of the period, what is the balance in the work in process inventory at the end of the period? Right. So job 12 is completed and transferred, and then overhead is applied at the end of the period. So that piece, that phrase there. Okay. What is the balance in the work in process? Okay, so for work in process, if job 12 is completed, it means that job 5 and job 8 are still in process. Agreed? Okay. So job 5, job 8. So we have direct materials, direct labor, and then overhead. So the 3 components of cost, right? So direct materials for job number 5 was 30% of the 120, right? 30% of 120 is 36,000. For job Job 12 was transfer, so job 8. So 25% of 1, so 25% is a quarter. A quarter of 120 is 30. All right, so you have 30,000 here. Now labor, all right, so for 5, so the rate is still 850, right? Okay, cool. So we're going to multiply 2,500 and then 3,100 by the 850. All right, so 2,500 labor hours by 850 is 21,250, right? 21,250, and then here we will do. We'll multiply that by the 1.2 one time, because that's going to give us the overheads, right? Overheads are 120% of labor costs, right? So if we just work out the labor costs, we could work out the overheads one time. So 25.5. All right, now let's do the labor cost and the overhead for job number 8. So job number 8 uses 3,100 labor hours at 850 per hour. So that's 26,350, right? And then we're going to multiply that by 120% to find the, so 31,620, which was what we had up here. All right. Okay, so now we have to add up everything there. So 0, 5, 7, 6 and 1 is 7 and 5 is 12, carry 1, 1 and 3 is 4, 4 and 4 is 8. Okay. So 0, 7, 9, 7, 8 there. All right, and 82 and 87 is 169, that's 170 and change, right? So option D. All right, so let's just double check it, right? So 82, 750 plus 87, 970. Yeah, 170, 720. Yeah, so plenty working for a little bit of marks here, boy. Okay, all right, well, that's just the nature of the game. All right, 22 and 23. So Kim operates a business which provides lawn mowing services to clients. Overheads are charged to customers using a predetermined rate of 80% per direct labor cost. The rate per direct labor hour is 60. The rate per direct is $60, okay. The following cost data relates to 3 jobs which were covered during the month of April. James, Mona, Sydney, okay. So materials, labor hours. So the total overhead charge on all 3 jobs, okay. So overheads are charged to customers using a predetermined rate of 80% of direct labor cost. Right, and then the rate per labor hour is $60. Cool, so here we will do. Let's just add up all the labor hours. We do have, because what I want, the total overhead, right? Okay, so if we add up 2, 2.5, and 5, we're going to get 9.5 labor hours. We're going to multiply that 9.5 by $60 per hour. And then we're going to multiply that by 80% or 0.8. Right, so 9.5 multiplied by 60 multiplied by 0.8. So we have 456, which turns out to be option E. All right. Okay, which of the following statements about activity-based costing is false? It improves control. It can, because with activity-based costing, you kind of have to do an audit of your entire production. Your production setup, your processes, that kind of stuff, to break it down into different components, pieces, activities. And it could improve control. It provides more accurate costs. Yes, it does. Indirect cost allocation bases are likely to drive costs. Yeah? It provides less information than cost systems previous. Okay, well, that one is definitely out there. All right. Okay, so Genevieve and Elijah, are we okay with this page? Anyone you want to go over? Any questions you have, any of them? No? All right. Okay, Google Meet, you know the drill, right? If you guys are good with that, a Genie chat or a thumbs up works. Either one is fine, right? If you have any pushback, anything you want to just recap, you want to debate, that's not a problem. All right. So guys, we are the halfway mark here, and we started about, what time we started? About 10 past? Yeah, I think about 10 past. So halfway in about 40 minutes is good, because it's 90 minutes you have for the full paper, and it's 45 questions, right? So we were at a pretty decent pace here. Let me just drink some water, and we'll continue. So I'll just open the next page one time, so you can get a little head start if you want. All right, so Young Corporation has the following costs associated with the manufacture of one of its products. So variable manufacturing, fixed manufacturing, variable selling, fixed selling, general and admin. Okay. Okay. During the year, Young manufactured 50,000 and sold 48. Under absorption costing, the standard cost for production. So under absorption costing, we attach all units, sorry, the standard production cost. So under absorption costing, we use fixed and variable. So it will be the sum of these two, right? And they said the standard production cost, eh? Right, I don't know how I get an arrow, but all right. So 11, if it was just variable costing or marginal costing, it would just be 730. Hey, Mr. Bali, good morning. How are you doing, sir? Right, Lakers Manufacturing Company uses a weighted average process costing system, boy. In July, 7,000 units were started and 5,200 were completed. Okay, so the remaining units as 1,800 was 60% complete with respect to materials and conversion. Okay, so this is interesting because normally in paper 2, they'll tell us once you start something, it's 100% complete with respect to materials. So such is not the case here, so make sure and read your question carefully. All right, so closing work in progress units under materials. So they want the equivalent units. That's what it seems like to me. So first things first, just to clarify, 7,000 was started, 5,200 were completed, which means you have 1,800 still in process. And of the and for that 1,800, they're only 60% complete on both fronts. All right, so that would give me, I think, 1080 equivalent units. So closing work in progress on the right, 1080. All right. Okay, next. Thunder Limited uses a weighted average process costing system too. Okay. In June, 6,000 units were used. Okay. At the time, at the end of June, right? Okay. Completed units was 4,000 and remaining 2,000. Okay, so 6,000 was started. 4,000 were completed, 2,000 remain, and it was 60% complete with respect to materials and 45% complete with respect to conversion costs. Okay, so we have different percentages. The equivalent units of production for conversion. Okay, so the equivalent units of production for conversion costs. So they're not just asking about work in process, right? They're asking for the whole thing. So also 4,000 were completed, right? That means 100% complete with respect to conversion cost or any cost. So you have 4,000 equivalent units there. And the remaining 2,000 is 45% complete. 45% of that, I believe, is 900. And when you add the two of them together, you get 4,900. Okay. Oh, wait, we didn't do 26. My bad. Okay, which of the following statements about a company that employs absorption costing procedures is true? The company cannot use the procedures for external reporting. No, they can. That is actually what is required for external reporting, absorption costing. The company treats fixed manufacturing overhead as a period cost. No, that's definitely false. Well, yeah, that's false too. Yeah, okay. So, the one what is true. Oh, wow, I misread. It's true, right. The company applies only variable production cost. Okay, so no. So obviously the answer is D, right? The company applies both variable and fixed production costs to determine units. Yeah, that's correct. Okay, cool. 1, 2, 3. 1, 2. Okay, cool. All right. Okay, Genevieve and Elijah, are we okay with this page? 24 to 27? Yeah? Okay. All right, Google Meet, same thing. If you guys are good with this page, give me a thumbs up, you can chat. All right, if you have any questions, of course, now is a good time to ask. All right, now if we do finish this paper early, I think I have an next one set up already. We could start. We mightn't finish that one before 12. We could go a little after 12 if you want. And then maybe do two papers again in 1 to 3, but then we'll have done 4. I mean, we have plenty of papers to do it, so it's not a problem. Not like I have a shortage. Just that I'm trying to save, and then if you all want, we could even finish earlier, because when I say earlier, like during the week, I had Monday, Tuesday, Wednesday schedule, but if you only want to do Monday, Tuesday, anyhow, we'll check in the chat. Oh, and now seeing 2 votes there. All right, cool. Okay, so let's go again. 28 and 29. Okay, so let's check it out. Celera Manufacturing Company makes 2 products, the Lynch and the pin. The company uses activity-based cost. Okay, let's go down to the question. What is the total overhead to Lynch and total overhead to pin? Okay, so let's take a look. Number produced, number of purchase orders, and number of inspections. Okay, so the purchasing order, the cost is driven by purchase orders, which makes sense, right? So for Lynch, it'll be 4,000 by 9. Sorry, we have to figure out the rates first. Okay, so the total. Let's get a total column going here, right? So 4 plus 6 is 10,000 purchase orders, and number of inspections is 3,500 plus 30 is 7,000. Right now, again, you have different ways you could do it. You could divide to get the rate and then multiply by the number of purchase orders, right? So let's just be conventional, do it that way, right? So for purchase orders, the rate would be 90,000 divided by 10, right? So $90,000 divided by 10,000 purchase orders, so that's $9 per purchase order. And for the inspections, it's 49,000. Now, to be honest, for inspections, we don't have to do anything because if it's split evenly, you just have to divide this by 2, right? So you don't actually have to do all this working, to be honest, right? So that's 7,000, and that's equal to, well, just 7, right? So $7 per inspection. Okay, so for Lynch, right, we're going to multiply the 4,000 by the 9. And we're going to add the 3,500 by 7. So that's 36,000, and that's 24,500, totaling 6,500. All right, and what is the total overhead charge to pin? Okay, so that will be, I guess, the remainder. So check it, right? You could add up. If you add up the 90 and the 49, you get 139, right? And all you have to do is subtract the 65. So you could do it that way, but if you want to say it the long way too, no problem, right? So we'll do the 60 by the 9. Sorry, 6,000 by 9, which will give us 54, right? And then we're going to add the same 3,500 by 7. So that's 78,500. Yeah, and if you add these two, you get 139, right? So 78,500. So there are different ways to go about working it, right? Depending on what you prefer to do. Okay. All right. Which of the following is a common fixed? Oh, this is the next one. I have troubles all the time. So let's see if I can figure it out this way. Maybe this might be the magical. Yeah, I don't know. Which of the following is a common fixed cost to the sales department in a hardware store? A common fixed cost to the sales department in a hardware store. Salaries of security guards in the store. That sounds good to me. Salaries of the supervisors in the department. All right. Common fixed cost. Okay. Cost of goods removed from the store after expiry dates have passed, and depreciation of fittings used exclusively in a specific department. Common fixed cost to the sales department. So I think it has to do with what is a common fixed cost. Is it that is a cost that is shared to the department from other aspects of the entity, or a common fixed cost to the sales department in the hardware store? So it's a fixed cost that the sales department incurs, but is common to what? To all the other departments that is shared, almost like something being apportioned. So yeah, if anybody has any insight, I'm quite open. I've heard C. I've heard that C is the answer. Cost of goods removed from the store after expiry. But that's a fixed cost, boy.
So how will hardware store have
That's a good question. What was that hardware store? Okay, so let's say I have stuff like maybe like paint or like glue, and they have it mightn't be like as short a shelf life as let's say food, right? But usually those things, why not B? Salaries of the supervisors in the department. Right, okay, so the supervisors in the sales department, all right. So that is specific to the sales department. Because the salaries of the guards in the store so they're there for the whole store. Okay, so that's not specific to the sales department. All right. Cost of goods removed from the store. See, that's the thing. I getting too deep into my thoughts. So I try to stay service level. So B might really be the best answer. But then why? But then it said depreciation of the fittings used exclusively in a specific department. Which department? The sales department. So then, but they didn't say. It says just a specific department. All right. Yeah, I'm willing to go with B. AI says A. Direct fixed cost. All right, let me see the comments. Hold on. A direct fixed cost. Salaries of the security guards in the store. Yeah, you see, I'm having trouble. So this is a hardware store. When you go to the hardware, you go to buy stuff, but the hardware will also have an admin department and probably like a storage department, right? Like maybe not a warehouse per se, but it has like a stock room that they'll go in the back and pull out stuff from. So it's not just the sales aspect of the operation, there are other aspects of the operation, right? Okay, cool. And it might have more, right? Maybe there's a security department, etc. Like as I said, salaries of security guards in the store. So the sales department, so the salaries of the supervisors in the department. But again, to me, the understanding here is what is a common fixed cost? It's a cost to me that is incurred by the entire operation that has to be shared. But this is a common fixed cost to the sales department in a hardware store. All right, so and stuff like this. Hold on, oh good, I'm seeing things. AI change the answer. Okay, let me see. The depreciation part. The fittings, okay, cool. Okay, all right. The correct answer is B, salaries. A common fixed cost is a fixed cost that benefits more than one department and cannot be easily traced to a single product or activity within the department. Okay. Security guards applies to the entire store. All right, so the sales department, etc., etc. Not specifically sales. All right. Salaries of supervisors in the department, fixed costs for that department. Expired goods, variable / loss related cost, not a fixed cost. Variable, why variable? Come back to that one. Depreciation of fittings in is okay, so this is a direct fixed cost. So a direct fixed cost, not a common fixed cost. Because it can be traced to that's yeah, so the word specific there means that okay, so specific as opposed to common. Okay. So D is out. D is out, that's specific. Salaries of the guards in the store. But isn't that kind of contradictory then? So if it's element part D, and again, I mean, I'm open to a discussion with this, right? If it's element part D, we can't use the depreciation on the fittings that was in a specific department because there's a direct fixed cost, right? The security guards are for the entire store. So wouldn't that be a common cost? The salaries of supervisors in the department is a fixed cost related to that department. It just says in the department, yeah? And I'm assuming it means the sales department. But you said that a common fixed cost, if you go back to the definition, is a fixed cost that benefits more than one department. So how do the supervisors in the sales department benefit the other departments? To me, the answer is A.
The AI said it was B, but I went and redid it, and it said that it was B.
Yeah. Oh, not the top one. Okay, cool. Okay, and now see the one at the bottom there, right? A common fixed cost is a fixed cost shared by multiple departments, right? And cannot be directly traced to one. So if it's security guards for the store, right, okay. But I guess it's the phrasing. What is a common fixed cost to the sales? Why does put a common fixed cost in a hardware? Right? If you took out this, right? Which of the following is a common fixed cost in a hardware? To me, the answer would be a bit more obvious. The salaries of security guards in the store. That's like, Jennifer, I think it came in a little after, right? So this one here, or did you come in on this one? No? Right. So it says the owner of a wooden furniture manufacturing firm has recently a new, more efficient admin process, right? Which of the following costs would be directly affected by this change? So I said in some of the papers, some of these same papers, they don't have the word admin. So when I see more efficient process, I know of right away, D is the answer, right? But then when they plugged it into the AI was saying that the admin, a more efficient admin process could improve scheduling, reduce conflicts, improve communication, and as a result could help reduce the need for overtime. So I was like, okay, all right. Yeah, okay, so where were we, 28? Yeah, so here, if you take out that phrase, to me the answer is clear, salaries, right? The presence of the phrase is what confuses me. All right, so yeah. Okay, which of the following is not a benefit of budgeting? It uncovers potential bottlenecks before they occur. That's a benefit. It provides benchmarks for evaluating subsequent performance. That is a benefit. It ensures that accounting records comply with generally accepted accounting principles. No. It coordinates the activities of the entire organization by integrating. Yeah, that's definitely a plus. Right, okay. So option C is the answer here. Okay, all right. So I guess we perhaps solved the mystery for number 30 for me there. But for everybody else, are we okay with 28 to 31? Elijah, Genevieve, we good there? Yeah? Okay, right, and Google Meet. We good? Okay, cool. All right, thank you. Right, lovely. All right, we're going again. 32 to 36. The role of the budget committee is to coordinate the preparation of budgets. Please correct me if I'm wrong. I'm just going with, to me, what seems to be the best one here. Prepare budgets for any period of time. Give advice on preparing final reports. No. Which of the following techniques identifies the period of time to recover the initial... What was that? What? No, okay. Sorry. Somebody Bluetooth connected to my... you would need security to protect what you sell. Kathleen. I agree. Yeah, that's correct. Right. Period of time to recover the initial investment. That's the payback period. So 33 is A. 34, sorry. When inferior materials are purchased for production at a lower price than standard, the result may be unfavorable price. No, if you purchase at a lower price, the material price variance will be favorable. So favorable material price, yes. Or unfavorable labor. Yeah, I'll go with C. Because if you purchase inferior material, then you might be putting your labor force at a disadvantage. They may have to do rework and stuff, or because the material is inferior. Maybe spend more time working with whatever it is, right? Okay, 34 is C. Let's go back to 35 and 36. A primary purpose of using a standard cost system is to provide a distinct measure of cost control. Yeah, okay. Provide more info for managers. That's the primary purpose of it. I don't think that's the primary purpose. Minimize the cost. No, not minimize the cost per unit. When the final cost per unit, it might help to do that, but that's not the primary purpose. We want to establish like a benchmark, right? Oh, what is somebody keeping the connect? What is this? Right. And make things easier for managers. Okay, no. I think 35 is A. Okay. Mary makes homemade soap, and they said soup, which she sells at 100 per case. The variable cost is 40, fixed cost is 60. What is the contribution margin per case? So contribution margin is selling price minus variable cost. So that's 100 minus 40, which is 60. Okay, so that was a nice page compared to what we just went through. The previous one wasn't that bad. It was just that security guard thing. But now that we know, right? Okay, Genevieve and Elijah, are we okay with this page? Yeah? All right, Google Meet, know the drill. Give me a little quick genie chat, thumbs up, anything that works, if you're good with this page. All right, just want to make sure in case you have anything that given trouble, I want to tackle it instead of waiting till the very end to come back to it, you know. All right. All right, a manufacturing company operates a system of standard costing as follows. Right. What is the total variable overhead variance? All right, you gotta help me here because I just see in 60. We budgeted 400 and the actual was 340. But the volume of production, the volume one would be, hold on. Yeah, I think the answer is 60, favorable. No, yeah, favorable. I think the volume of production, that one would have to do with, if it was a fixed overhead variance or total variance, because total overhead, because fixed would be involved there. All right, 38 and 39 refer to the following information relating to iPhones sold by Digi Telecom Systems. Okay, what is the break-even point in units? Break-even point is the fixed cost divided by the contribution margin per unit. So that's 100,000 divided by 1,000 minus 500, which itself is 500. So that's 200 in total, right? So 200 units. What is the contribution margin ratio? The contribution margin ratio is the unit contribution margin divided by the selling price. So the contribution margin was 500. If you take 500 as a percent of 1,000, you get 50%. Right? Which of the following methods is the simplest approach to making capital budget decisions? Payback period. Which of the following pieces of information are required when using the payback period method to evaluate a project? Initial costs, useful life, net savings, yeah? So 1, 2, and 3. Okay. All right. All right, Genevieve and Elijah, we okay with this page? All right, Google Meet. If any pushback, let me know. Or if you're good, let me know. Yeah, that's great. All right, and then on to the last page. All right, so which of the following is an advantage of the payback method of capital budgeting? It considers the time value of money. No, it does not unless you do discounted payback. It is consistent with other financial measures and data is really, I think it's that one. It is simple to use and understand and measures liquidity and allows for risk tolerance. It considers time value. No, so okay, so A and B are out. I think it's B, right? Simple to use and understand, yes. Measures liquidity. It uses cash flow. So I guess you could say it measures liquidity and allows for risk tolerance. That's the part that always puts my antenna up. So whenever I encountered risk tolerance, it had to do with, we had percentages and weightings and stuff. And to me, that doesn't factor into this. But maybe there's something I'm missing. But yeah, it's consistent with the other measures and data is readily available. So I'll go with B. But the problem is, I feel like C has piece, but that last piece, the risk tolerance one, that one I had to check. If anybody knows, let me know, right? If you have an articulation that why that piece is related to the payback period, let me know. But yeah. Which of the following variances measures deviations in amounts spent for overhead inputs? Isn't that variable overhead spending? Yeah, Laura, talk to me.
So for 42,
Yeah.
yeah, I was saying C.
C.
I don't know if anybody want to check it as well, but yeah.
All right, so we put C. Yeah, because the simple and easy to understand measures liquidity factors in, but the risk tolerance part of it is the part that. Okay, wait. I think I understand why the risk tolerance, because I think maybe I was thinking about risk tolerance from a different angle. Right. Simple to use, easy to understand. Yeah. Okay. I was applying a different right. Right, that's the thing. Yeah, risk tolerance has to do with how fast you get your money back. Right? Yeah, it allows for risk tolerance. Okay, so it just applies that particular phrase in a way that made my brain go off on a tangent. Yeah. Okay. Okay, yeah, I'm fine with that. I think I used to use that all the time, except and then either last year or the year before when somebody was like, B is the better answer. And I was like, okay, that makes sense. And I was like, okay, where the risk tolerance thing came from? I just assumed it was tagged on. I never really thought about it that much. But yeah, when you think about it, the risk tolerance in this case has to do with how long it takes to get back the money. Because that deals with risk, right? Okay. Which of the following variances measures deviations and amounts spent for overhead inputs? Overhead inputs. Fixed overhead volume. To me, that has to do with production levels, like how we do, like almost like how we calculate the over or underapplied overhead. The fixed overhead budget, the expense. So D seems tempting, but spend for overhead input, right? It wouldn't be C because that's overhead efficiency. So it's either B or D. And deviations, that's a variance, right? Amount spent for overhead inputs. Overhead inputs. What is overhead inputs? Yeah, I'm not sure about this one. So just check this one. I was going with B all the time, to be honest. That's my go-to answer for this. But the presence of D is causing a little bit of a, what you call it, flicker in the radar.
Sorry, what would you get to input?
That's what I'm trying to study. Overhead inputs. So for example, like if you think about like variable overheads, like indirect materials or indirect labor, right? To me, that's inputs, right? Just like if you think about regular inputs for direct materials, direct labor, right? So it's just the indirect versions. So when you're talking about the spent, or what the amount spent for overhead inputs, to me that's variable overhead spend. And that one is it jumps out at me. The fixed overhead or expenditure budget variance, that one is also dealing with expenditure, and it says so. All right, okay, we'll come back, we'll put the asterisk there too. We'll triple check those. All right, the printing press is seeking to purchase a new printing machine. It will cost $800 and will increase cash flow by $100 per year. 15 years, zero salvage. The company's cost of capital is 7%. So the interest factor for the annuity is 9.1079. What is the net present value ignoring tax? Okay, so what you would do is you'd multiply the 100,000 by the 9.1079. That's going to give us 910,790, but that's just the sum of the present values of the future cash flows. You have to minus the initial outlay because they're asking for the net present value. So that's 110,790. And I almost forget that we have one more to do. Right, what is the materials quantity or usage variance? All right, cool. Materials used, purchase price of material, standard quantity, standard price. Okay, so actual quantity, actual price, actual quantity, standard price. Right, so actual, so purchase, so used, standard quantity, 40. Okay, cool. So actual quantity is 4,000, right? Standard quantity is 4,300. Okay, so we could flip it. Cool. So we budgeted that. We actually use this. And standard price is 330. So that's 300 by 330, which is 990. Favorable. So that's E. Okay. All right. So yeah, that's it there. All right. So the only, I think two. Yeah, these two. What was the other one? This page was good. Was there one here? No. Okay. Yeah, this one here. No. Okay. We sorted that out. All right. Cool. So it's just these two. Okay. All right. Elijah and Genevieve, are we okay with this last page here? Yeah. All right. Cool. All right, Google Meet. You know the drill. If you're good with this last page, let me know. Yeah? Okay, so we have 40 minutes again, so I don't feel like we should waste it, right? Or take an extended break, right? So what we'll do is I already have another, what you call it? I think I have 2021 set up already too. So we could go ahead, but then it means that we'll probably finish half of the paper now, and then we'll finish the half again, and we don't have to take a whole hour for lunch, but I did tell people that we would start at 1, so I don't want it to start too early and then next time they come and they miss some stuff, and then, right, so anyhow, but long story short, yeah, and then again, we don't want to finish all the more recent ones too early, but we could, because again, as you'll see, the answers can repeat. Okay, so that was 2020. Let me get 2021. I do have 2023, it's just in a different folder. All right. Oh, hold on just now. Sorry. Okay, cool. All right, so sorry, just let me and let me send it in the chat as well, in case anybody doesn't have it. Why am I in the POA chat? Okay, cool. Let me see the votes. Right. Okay. Yeah, so Monday and Tuesday seem to be full days. So yeah, maybe if we finish whatever we have to finish by then, maybe we don't have to do Wednesday, but we could. You know, especially if 2024 or 2025 show up, or both of them, that would be fantastic. I am in a, what you call it, a WhatsApp group chat with some other accounting teachers in the Caribbean. So of course, they're asking for stuff too. All right, so we will go till 12 with this, right? So even if we like in the hopefully we can finish that. So this might take 2 minutes to print, so that's 35 minutes. You could do 40, but we took an hour and 10 minutes just now. So yeah, if we do the 35 minutes, we should get halfway through the paper. When we start back after lunch, we could do a 35. Well, finish that in 35. And then take an hour and 10. Yeah, that will carry us to about the 2 hour mark there. Okay, cool. Not bad. Oh, okay. Okay, let me staple that up for you guys and then we'll jump right back in. I'll just drink some water before I start. Take what, sorry? Yeah, you can. Oh, I forgot this. We'll give Genevieve a minute or two, but we will start very soon. All right. Yeah. Oh, okay. Yeah. Well, I guess yeah. Bathroom break. All right. Let's go. Okay, so let me just All right. So one major difference between financial accounting and management accounting is, okay, so financial accounting uses only current and future. No, financial uses past. Current and past, if you want to say that, but you're right, not future. Financial accounting reports are prepared primarily for internal use. Nope, that's when you do financial accounting, is for external use. Management accounting is mandatory for companies trading on stock exchange. No, financial is so they could publish the statements, okay. And generally accepted accounting principles do not apply to management accounting. Yeah. 2, which of the following are not period costs? Well, we said it's either product or period. Product being manufacturing, so easy answer. An advantage of the piece rate method of wages is that right, so we said that already. It doesn't help to reduce rejects. It actually might increase rejects because people are trying to produce more, which is the advantage. Item D is an incentive to produce more within a given time. So the more work they do, the more they are paid, right? But then it could cause more rejects. Reduce monotony, I don't think so. Guaranteed to lead to an increase in product quality, no it's not. All right. Keystone, okay, so your license fee. So we know this one. So Keystone produces a product under license from Zango. At the end of each year, Keystone has to pay Zango the license fee. So 60,000 for the first 60,000 liters is $30,000, and for every liter thereafter is 30 cents, right? So we said before, if you were to consider it on a graph, right, basically what you would get is a horizontal, flat horizontal line for the fixed cost, and then a gentle slope, right? So that's a mixed cost. There's a fixed component and then a variable component, so mixed. Right. Hey, look. You're employed as a junior cost accounting clerk at a wooden furniture manufacturer. The owner has recently introduced a new, more efficient process. So please note the absence of the word administrative. Which of the following costs would be directly affected? Overtime paid to carpenters, right? Because of course, if you're talking about the context, to me implies a new manufacturing process, which would, and it's more efficient, so that's going to reduce overtime, right? With the exception of number 1, everything is repeat so far. So number 1 was a major difference between financial and management is D. Generally accepted accounting principles do not apply. All right, we did 2. 2 is talking about which is not a period cost. So it's either product or period, and product is manufacturing cost. Number 3, we saw the piece rate advantage was D. And then we saw number 4, the Zango and Keystone as a mixed cost, right? Number 5 was the one from the previous paper we were talking about where they had a new admin process. And here it is, the word admin is not there. So we know for sure it's D. All right, in which of the following ways should plastic that is used in the manufacture of dolls be classified? Right, so prime, yes. Product, yes. Direct, yes. Fixed cost, no. So option D. Okay, Elijah and Genevieve, are we okay with the first page? Any questions, anybody?
What about question? What is the difference? Literal difference.
Yeah. All right, okay. And Google Meet, just let me know if you're good with that, please, and thanks. All right, sorry, 1 second, Right. Cool, we go in again. All right, indirect labor is not used in the calculation of prime cost. Factory overheads, yeah. Total manufacturing, yeah. Cost like is manufactured, yeah. Okay, cool. In July 2016, the beginning balance of the raw materials in the inventory account for Kyla was 46. Ending was 47. Raw materials used was 127, 120. The cost of materials purchased was, well, most likely is 128. Yeah, okay, cool. So basically what would happen here, so is your opening inventory, your 46, plus your purchases, right, minus your closing inventory gives us 127. We could ignore the 120 for now, right? So if you work backwards, 127 plus 47 is 174. And if you minus the 46, you get 128. So 128, 120. All right, before we scroll on to 9, we could do 11, right? Which of the following graphs reflects the renting of extra warehouse space by a firm during periods of increased demand, we know is A, as a step fixed cost. All right, 9. Barry operates a guest house. Okay, which of the following items would be classified as variables in the costing of guest rooms? So wages. So furniture, no. Building, no. Water. Well, unless you have a meter on each room, water is a kind of fixed cost, right? I mean, the more guests you have, the more water they use, fine. But which of the following cost items would be classified as variables? I'll go A. Feel free to check that out and let me know if there's any difference and the rationale of it, right? Right. A firm's, okay, okay, we know this one already, so we did this one. Product has an annual demand of 2,000 units. Sorry, AI says water. All right. All right, so, but why not wages of housekeeping staff? That's the question. That's the one I want to know. Why not that? I'm okay with it being water. Water is a variable cost. But why not wages? Housekeeping staff paid per hour. Per hour is a variable cost. They aren't paid. They aren't salaried workers. All right. Okay. Well, I'll put an asterisk next to it, and we'll put a little thing here, right? So we'll come back and check that the rationale. But if you get it, let me know. Right. So for this one down here, annual demand of 2,000, cost of placing. Okay, there's a holding cost of 8 per unit. What's the annual carrying cost, right? So again, it's 2,000 divided by 2 to give you the average inventory held at any point in time, multiplied by the annual carrying cost per unit. So that answer is 8,000. And conversion cost consists of labor and overhead. So that's 1 and 3. Right. So we just put in 1 and 3, right? So 1 and 3. So option E. 1 and 3. So, right, conversion cost is the cost of converting materials, raw materials into finished. Right. Oh, okay. Right. Okay. Explanation. Variable cost change depending on level of activity. Agreed. In this case, number of guest rooms occupied. Okay. Water usage increases as more guests stay in the rooms. Okay. Housekeeping staff wages are usually considered a fixed cost because staff are paid regardless in number of guests unless wages are strictly per room. Okay. Understood. B and C are fixed costs. Right. Okay. All right. D, water. I'm convinced. I like that one. That's a good explanation. Okay. All right. Are we all okay with this page? Any questions? Of course, number 11 is A. All right. If you have any questions, let me know. All right. Google Meet, we good there? Yep. All right, cool. All right, Genevieve, Elijah, we all right with that one? All right. Going again. 13 to 15. So Gibson Manufacturing uses machine hours to allocate manufacturing overhead to all jobs. For a particular job, the budgeted manufacturing overhead is 30,000 and budgeted labor hours and machine hours are that. What is the predetermined overhead rate per machine hour? All right, so budgeted overhead is 30. Machine hours is that, and then 30 divided by 100 is 0.3. Item 14, client has decided to change his or her costing system to a total absorption costing basis. Okay, so we have cost item, rent and rates, lighting. Floor area occupied by each department. The budgeted overhead cost for the cutting department is, okay. So rent and rates, light and heat. So floor, okay, so if we add up the total floor area, right? That'll give us 5,000. The cutting department is 2,000 square feet out of the total 5,000. Total overhead is 7,100. Sorry, my bad. So if we multiply the 2 over 5 by the 7100, that's 0.4. So that's 2840, right? Yeah, 2840. Which of the following support department allocation methods is most widely used because of simplicity? Direct. All right. Okay, Genevieve and Elijah, 13, 14, and 15. Any problems, issues, or are we good with this page? We good? Google Meet, give me a quick little feedback. Let me know how we doing today. Right, okay, cool. Lovely. All right, so we're about 1/3 of the way through in about 10 minutes. Well, then again, hey, look, AB1 and AB2, boy, and we find, oh, they're actually asking for the cost of AB1. All right, hold on. Look at 17. What entry should be made to record the sale of AB2? Let's answer that, because the entry to record the sale is debit, cost of sales, credit, finished goods. Debit, cost of sales, credit, finished goods. Right, cool. So that was in the previous paper. Now we have a calculation to do, but the total cost of AB1, right, so we have the working process brought forward, right? We have the material cost 36, direct labor 36. All we would need to add here is the overhead. And the overhead is 150% of direct labor, right? So, sorry, my bad, right? So the overhead is 150% of 36, which is 54,000. Right, 54 and 36 is 90. 90 is 126. 126 and 12 is 138. Right. Okay, and that's it for that page. Right, let me know if you have any questions. All right, Celera Manufacturing Company makes two products. The Lynch, okay, so we saw Celera in the previous one. They use ABC. What is the total overhead charge to the Lynch? Okay, so overheads, purchase orders, and quality control, right? So number of purchase orders is 10,000 in total. Sorry, inspections is 7,000. Right, so for the purchase orders, right, so again, you could use the 4,000 multiplied by the 90,000 over the 10,000. Right, that will give us 36,000. And then for the, what it? 40% of that, right? And for quality control, right? And if you look at it, if it's 3,500 each, as a half and half split, a half of 49,000. So again, you could do the long way. You could do 3,500, sorry, by the 49,000 over 7,000, which is 24,500. So that's 65, which we already did in the previous paper. Right. The type of costing system that would be most appropriate for a paint manufacturing company is process costing. Right? The units are all homogeneous, perfectly fungible, right? Indistinguishable from any other unit of output. Under absorption costing, the standard, okay, so we just did this one. Young Corporation has the following costs associated with the manufacture of one of its products. Okay, so variable, fixed. So under absorption costing, the standard production cost for 2016 is 1130. All right, okay. We okay there? Right. Google Meet, let me know if you're good. All right, please and thanks. Yeah, okay, cool. All right, let me go here. Derek readers, okay, the absorption inventoriable cost per unit. Okay, so during the year, the company produced 20,000 units, sold 15,000. Cost data relating, okay, so materials, labor, variable, total manufacturing overheads budget. Okay, so we'll do the 216 divided by the 18. That'll give us 12, and then we're going to add all 35 and 10 20, sorry, is 55, and 10 is 65, and 12 is 77. Because it's absorption, which is variable and fixed, right? Cool. Right, 22 now. Susie operates a beauty salon and has provided the following cost data pertaining to 2 customers. Jacqueline and Joel Boy. Okay. Sorry. Oh no, right. That's not your. Overheads are charged to customers based on a predetermined rate of 75% per labor hour. The direct labor cost is $120 per hour. So the total cost of providing the service to Jacqueline. Okay. So to Jacqueline, so direct materials, direct labor, and then overheads. So materials is just the 250. The labor is 120 by the 3, which is 360. And then the overhead is 75% or 3/4 of that, which is in this case 270. So 225 and 36 is 61, plus that is 880. So 880. Right, so that's about the halfway point in about 15 minutes. Anybody else feeling a little worried or? Yeah, because the stuff is repeating, right? And whatever didn't repeat so far has been pretty manageable. All right. Okay. All right. Just now, I have a little pain here. Okay. All right. Whew. Yeah. All right. Google Meet, just give me a little thumbs up or a G if you're good with this page and in particular paper so far, right? Yeah? All right, lovely. All right, so let's go. Let's see if we could wrap this paper up before we take a break. Maybe we could do 2022 and 2023. Now, this warning, the copy I have of 2023 is a bad copy. Yeah? It's kind of dark and stuff. So let's check it out. So, okay, we saw Thunder, right? Thunder Limited uses a weighted average process costing system. In June, 6,000 units were used. At the end of June, completed units total 4,000, and the remaining 2,000 was 60% complete with respect to material and 45% with conversion. The equivalent units of production for conversion, right? So 6,000 were started, right? 4,000 were completed. I thought I switched across to the green, right? So 4,000 units were 100% complete. So that'll give us back just the 4,000. But the remaining 2,000, which were incomplete, so 60 with respect to material, but 45% with respect to conversion. And of course, 4,000 plus 900 will give us 4,900. 24, which of the following is a similarity between job order costing and process costing? Both are used to collect the cost of production. Cool. All right, Jenny Boy. Jenny's business provides lawn mowing services. I feel like we saw this. Overheads are charged using a predetermined 80% of direct labor cost. The rate per direct labor hour is 60, following cost data. So the total overhead charge, the total overhead will be 80% of the direct labor cost, right? And the rate per direct labor hour all right, yeah. So if we add up 2, 2.5, and 5, we'll get 9.5, right? Cool. So we'll take 9.5 multiplied by 60 and multiply that by 80%. So yeah, scene 456. All right. Oh, hey Charlie, how you doing? There's Cape stuff, so not sure this may be what you might be interested in. All right. So, we have one more on this page. Hey, look, Lakers again, boy. Lakers uses a weighted average process costing system. 7,000 was started, 5,200 were completed. The remaining WIP was 60% complete with respect to materials and conversion. So, closing work in progress units under materials, okay? So, closing WIP was 1,800. So, 7,000 minus the 5,200. That's 1,800, and you're going to multiply that by the 60%, so 1,080. All right. So what's this? This is Keep Accounts, Unit 2, Charlie. Alright, that's for, yeah, today's Keep Accounts. Tomorrow afternoon into the evening, we'll be back at it with the maths, right? Okay. Alright, Genevieve and Elijah, we good with this page? Alright, Google Meet, just let me know. Yeah, alright, cool. Which of the following is not an advantage associated with service sector costing? Provides more accurate. Sorry, did you do the accounts paper one? No, I didn't. I got a good copy yesterday sometime, but I focused on the maths and then the maths, the keep accounts, the add maths, and then we'll do that POA at some point. It done gone. It don't matter right now in terms of what the solutions are. You can't change anything. Right. Not an advantage. It increases. I actually don't know. I'm really not sure. If anybody knows, let me know. I don't know. If I had to guess, if it's not an advantage, I would say D. It generates higher cost of services. Right? I would say an advantage, service sector costing, it should increase the accuracy of cost allocation and it should provide more accurate information on resource inflows and outflows. I'm not sure about the B. It assists. Okay, so, if I had to guess, I would go with D. That's not an advantage. Yeah. D? Yeah. Okay. Right. Big Display Limited uses a job order costing system. The job cost information with the client. Okay, windmill. D windmill. Okay. What is the total job cost of the job? Oh, it's the kid next door, I think. All right. Okay. So materials 2,500 by 1,250. Right, 2,500 by 12 will be 30,000, and a half of 2,500 is 1,250. So I think that's 31,250. 618. Okay, so that's 60 and 1008 800. And 750 per direct labor hour manufacturer. So 750 by 18. 7 does 126 plus 9 is 135. No, sorry. 7 right, that's 4,200, 4,500. I don't know why I have a 7 there, because 5 and 0 is 5. Where does 7 come from, boy? I see a 2 somewhere in the midst. All right. Yeah. Okay, right, that was 27 and 28. Let's carry on. Yeah, I think we're going to finish this paper, then break for lunch. I don't think it makes sense stopping in the 30s or 40s. And after lunch, we could figure out what we're going to do. Right, 29 to 30. Okay, we saw this already. What did they want in 29? Hold on, let's come back to 20. 31, role of the budget committee. Coordinate the preparation of budgets. Right, 32. In CVP, the margin of safety is defined as the difference between actual sales and break-even sales. Right. 33. When inferior materials are purchased for production at a lower price, the result may be so favorable material price variance, unfavorable labor efficiency. That's C. Okay. We could look at 29 now. Adams Company, what do you want? The total amount of overhead applied to job number 8. Okay, cool. Right, so job number 8, total, so overhead is applied at the rate of 120% of direct labor cost. So job number 8 had 3,100 labor hours. The cost is 850, so it's 3,100 multiplied by 850 per hour by 1.2. 31,620. Right. At the end of the period, the actual overhead cost total 93. So the amount for over or under applied. Okay, so we have to work out total overhead applied. So total overhead applied. Right. So we'd have to add up all the labor hours and multiply by 850 and then by 1.2. Right. So we add up all. That's 56. So that's 9,800. Okay. So yeah, so 9,800 by 850 by 1.2. $99,900. So we applied 99,960, but we only incurred 93,000. So that's an over application of 6960. Okay. And 34, which of the following techniques identifies the time period to recover the initial investment from an annual cash flow payback period? Okay, cool. All right. All right, ladies and, lady and gent. Genevieve and Elijah, how are you feeling with this page? Any questions, problems, issues? Are we good? Good? All right, Google Meet, you know the drill. Let me know how we go in there. Yeah? All right, thank you. One person. All right, let's go. So the standards that allow for no machine breakdown or other work interruptions and which require peak efficiency at all times are ideal standards. Okay. The printing press. So we saw this one. We know the answer is 110,790, right? But again, right? So the new machine will cost 800,000 and increase cash inflows by 100,000 per year. It will have a useful life of 15 years, zero salvage value. Company's cost of capital is 7%, and the interest factor for the annuity using 7% of 59.1079. What is the net present value of this investment ignoring inflation and taxes? Right. So it will be the 100,000 multiplied by 9.1079, right? That'll give us 910,790, and you're going to minus the initial outflow from that. So we know it's 110,790, right? 37, the NPV and IRR methods of decision making in capital budgeting are superior to paper because they consider the time value of money. That's 37. All right, 38 now. What is the break-even point in units? Okay, so break-even point is fixed cost divided by selling price minus variable cost. So fixed cost is 100,000. Variable cost is 1,000 minus 500, which is just 500. Into that is 200. Therefore, really? Yeah. 200. The NPV of a product is positive. However, the company did not accept this product. The most likely reason for rejection is that the qualitative factors outweigh the benefit of the investment. If the NPV is positive, then A is the opposite. B doesn't make sense. And C also doesn't make, the return is greater than you want it. Favorable overhead volume variances most likely indicate efficient performance. All right. Right. So remember, volume variances have more to do with like the production level. So if you actually produce more with the given resources, then like it's like your average cost is going to go down, right? Of course, if anybody wants to cross-check me with that with the AI, please feel free to do so, right? The overhead variances are the ones I am not too strong with, I'll be very honest with you, right? It just can't seem to stick. So hopefully one day and 1 year, I'll be able to make them stick. All right, so we're into the last 5. Let's see how we could do here. I think we already kind of decided we'll go a little bit past 12 if necessary. Not that I think it'll be necessary. Adugu Incorporated has prepared the following. Sorry, one second. I see no comment. Oh, right. Okay. Oh, that was from the previous one. Okay. Right. So the following production budget for 4 quarters. Okay. If the budgeted unit selling price for the second quarter fell to $1, by what percentage did total budgeted revenue decrease? Okay, if it fell to $1, so hold on, the second quarter is this quarter here, right? Okay, so if it fell to $1, it means we're losing 75 cents. So what we'd be losing is 1.2 million units by 0.75 cents. Well, sorry, 75 cents per loss. That's 3 quarters. So that's $900,000 that we're losing, right? By what percentage the total? All right, and then of course what we'll then do is we'll take the 900,000 and we're losing that. So that as a percentage of the budgeted revenue. Okay, cool. So let's see. So 1.2 million by 0.75, right? Then divided by 4860. All right, so about 18.52. Yeah, there you go. 18.52%. Which of the following is an advantage of the payback method of capital budgeting? Right, so we know it's C, simple to use and understand, measures liquidity, and allows for risk tolerance, right? Material price and materials quantity. Okay, cool. So let's do that quickly. So the price variance, right? So that's so actual price. No. So if it's more, that's an adverse, right? So standard price minus actual price by actual quantity, right? So standard price is 330. Actual price is 3.2 and then actual quantity is 4,000. So that's 0.1 by 4,000, which is 400. Favorable, because you spent less. You spent 320 per unit when you were budgeted to spend 330. So it's 10 cents less per pound. What is the materials quantity or usage variance? Okay. So that is standard quantity minus actual quantity by standard price. So standard quantity is 4,300. Sorry, my mom outside. Hello? Okay. Cool. Yeah. So that's 990 favorable, right? All right. I'm gonna put up 40. I just have to pop outside to get something. Oh, wasn't this one the same 60 favorable? One second. Yeah, so if budgeted was 400 and actual was 340, then 60 favorable. Unless we have any kind of incidences otherwise, which I don't think we will. Okay, so yeah, we finished 2020 and 2021. So, sorry, so go back to 44, sure, no problem. Yeah, sorry, if it's crappy lemon, if you need me to neaten it up, I'll neaten it up. Okay, cool. All right. Okay, so folks, we'll break for lunch now. We'll resume at about 1. Right? If you all want to start back earlier, let me know. But I think we did tell some people 1 o'clock, and I think they did respond to it in the chat for 1 o'clock. Let me just check that real quick. Right, Saturday. Yeah, well, 12 people said they would be here today. I only had about 8 of y'all and 9 after lunch. So if it's the same 8 or 9 people, that's fine. I'm good with that. Right, so if you all want, we could finish off 2022 and 2023. I'll use lunchtime to kind of just prep the papers, as in like put them in this particular format as opposed to how they normally are. And then if that's the case and you're good with those, with these 4 most recent papers, and you all don't have to come to the other sessions. If you all want it, then you're welcome to. And then what I could do then is I could just rework these papers with those people who come then. Or again, we could do 2018 and 19 and go back and that kind of stuff, because yeah, you'll see the question just repeats. It just gets boring after a while. Anyhow, we're breaking for lunch now. I have to go and just get some food for my son right there at home. I'll come back, I'll prep the 2022 and 2023, and then yeah, we'll start back at 1.